Okay, so today is kind of a big day. I'm going to tell you what my favorite ICT concept is because people are always asking me this. But not only that, I'm going to explain to you what the concepts are, and I'm going to tell you how this is also my favorite ICT setup. And I'm going to give you a setup that you can backtest. Now, one of the things I want to say from the get-go is that I am not claiming that I made any of these things up, okay? This is all based on ICT's teaching from the core content, the 2022 mentorship. This is what I'm basing myself on, and I will tell you my interpretation of these things. So I want you to keep this in mind. This is basically repackaged ICT stuff. That's literally what it is. And if you guys want to really learn for yourself and really learn from the source, then I'll recommend you going for ICT's channel itself. But today I'm going to tell you about my two favorite concepts and how I use them in my live trading. So let's get into it. Just kidding, I'm not going to slap the camera. So first I'm going to tell you what my two favorite concepts are. One of them is power of three and the other one is the daily bias. These to me are my favorite concepts of ICT. If you know this and you're not profitable, then you understand that your problem is the lower time frame, because if you master the higher time frame, you simply start breaking things down onto the lower time frame in order to become profitable. If you want to learn ICT, I really recommend you first understanding the daily bias and power of three. These are two very simple concepts which I will talk about. But if you master this, the market will become just so much more clear. And once again, as I said, that you should probably learn from the source instead of something that is maybe repackaged. Maybe the way that you are going to hear it from me is going to click for you, but I would also recommend you actually going to the source. So I'm going to leave a link in the description for two of ICT's videos about the daily bias and the power of three. Okay, so getting that out of the way, let's jump onto the screen where I will explain power of three mostly because I've already made a video on the daily bias. Let's get onto the screen and let's get this going because I also want to show you my setup. Okay, so let's start with the power of three. So the power of three is an understanding of what every single candle basically looks like. A candle normally has two wicks and a candle body. Now, what are these wicks? So let's go into how a daily can form to leave the two wicks and the body. In order for this to happen on a daily basis, you need a candle to start neutral, which every single day it starts. I normally apply this mostly on the daily, but once again, the market is fractal. You can look at other time frames to do this. So the power of three says that the market starts moving up. This is what we call a Judas swing. When we expect a bearish day. So we have the Judas swing, which is a bullish move on price. We have the start of this bullish move, and then price starts slowly moving down. But what happens when price starts slowly moving down? The price actually starts leaving a wick behind because the market has been there already, and so it starts moving down and it starts leaving the wick, right? So then what do you expect? You expect the expansion. The expansion is basically during the kill zones that ICT has. That's when you see the market moving down and you see the big bearish trend. That's when you see these big candles on the daily, weekly forming. But then what happens? You have an end of the day retracement, which once again gives us this wick on the daily or any other single candle. Now, people also call this the manipulation, expansion, and then the distribution. So manipulation, expansion, distribution. This is what you can expect on a day. That's why, once again, those two wicks are left and you have the big body. If we go onto the daily on euro dollar, you can see that you have these three phases of the day in general. You have wick, wick, body. Wick doesn't have a wick, but you have a big body. Then wicks, very small wick, a wick, and a body. And you can see this most of the times. It's rare the number of days where you don't see two wicks and a body. Now, if you come back into this idea and I ask you, where do you want to position yourself on a bearish day? We have to remember that this is when the daily bias is bearish. Your goal is to position yourself in this wick or just at the beginning of the bearish body, because else you are just chasing price right there and you may get caught out and get short when this wick is forming. So this is why the daily bias is so important. You need to understand this because then you know where you want to position yourself. You don't want to be positioning yourself when the day has already gotten this big bearish move, because then you can just get caught out and be part of the distribution. So you need to be very careful with this of when you enter into the market. That's why if you are looking at the market, I would want you to try to position yourself right here. This is where I want you to look for shorts, and inversely, this is where I want you to look for longs. So keeping this in mind, I want you to also know something else. The power of 3 doesn't only happen on the weekly, it doesn't only happen on the daily, it happens on the session, it happens on every single candle. So every time you think you have missed out on a move, I want you to understand that you have the London session, the New York session, you have London close. All these things are possibly going to give you a power of 3. And so with that, let's say that you've missed a move during London. I don't want you to stress. Why? Because there will be a pullback on the day, possibly during New York, that is going to be the Judah swing and the bearish move. So this is how I also lost all the FOMO that I previously had when I missed a trade during a session. I knew that a future trade was coming. So this is how I look at the power of 3. We have the daily bias, the power of 3. If you want to check the video on the daily bias, it's going to be linked in the top right corner right now. Go after this video. Then you also think about the power of 3 in every single candle that you look at. Start looking at the candles right now, and I want you to mark on the chart a draw on liquidity that you may have, and I want you to see every single candle start bearish, for example, then end up bullish, start bearish, end up bullish. It's manipulating people out, and then it's reversing on them, having a power of 3 almost every single candle. So I want you to keep this in mind when you think that you have now missed a possible move. Now, let's say that there is a bullish draw on liquidity right here. So now I'm going to give you a way to implement this on your trading in general, and I want you to test this out. I want you to backtest this. But with backtesting right here, it's going to be a little bit more of a headache. Why? Because I need you to actually look every single day onto the daily and define what your daily bias is, which you can watch the previous video. But let's say that we have a bullish draw on liquidity right here, and this candle has just finished bullish. So what do you expect? You expect another bullish candle that will eventually come for the bullish draw in liquidity. So you need to understand that as a trader, you want to get into the market at the opening price or below, because this is going to mark the manipulation on the day. This is when the day is still bearish. Right here, I want you to look at this and not be fearful that your daily bias is wrong. I want you to actually think the opposite. I want you to think that your daily bias is actually right, because the market is doing exactly what you were thinking about. And so you go onto the lower time frames, and let's say that this right here is the daily open. I want you to look for the market to start moving down. The market can do whatever it wants. It then manipulates, grabs some sell side liquidity. So now people are bearish. People are looking at this and they're like, oh my god, this is now going to start moving down, and they're going to look for bearish trades. I want you to actually look at this as the manipulation phase right here. I want you to wait for the market to show bullish intentions to close with a candle above the previous 15-minute candle, and then the entry is going to be at the body of the other 15-minute down close candle. So this is how I want you to keep this, and then this is the daily draw on liquidity. So what do you expect? You expect a bullish break of the down close candles that manipulated people out. Then you want the power of 3 to happen on a 15-minute candle too, where you have the move down, it tags you in, and then you want the expansion on the day in the target to be met. This is a very simple way of looking at the market, that if you understand the power of 3, because this will then turn this into bullish. This is what I want you to do. Once again, I want you to look for the Judah swing. I want you to look for this manipulation right here, which is going to happen while the daily is bearish. Then I want you to look for a bullish close, signaling momentum. And then I want you to enter long with a good stop loss, because you don't want to be manipulated out too. You want to be careful. So when you are looking for longs, I want you to look for a bullish order block, which would be this, that for example would be a down close candle. This would be a down close candle like that. This would be a bullish candle. In your goal, once again, what do you want to do? You want to enter while this is bearish, right? It taps this candle, and then it retraces and starts moving bullish. This is what you want to happen. So, okay, so I'm giving you for free an entry model. Okay, I want you to test this out. I want you to go onto the backtesting. I want you to look for a sweep during a Judah swing, a market shift, which is important with candles, and then I want you to look for an entry. So with all this being said, let's look at some examples. Okay, so let's look at this week where you are expected to have a reaction of this fair value gap right here. We had this big bullish push on the fair value gap. So the weekly bias for this next week is bullish. So on the daily, you are also looking for something bullish. But once again, let's think about power of three. You may expect a bullish week to target these highs right here, but there's also power of three. So you expect bearish followed by bullish, right? So let's look at what happened on the day. We had this bearish move, which definitely happened in the beginning of the day, followed by this bullish push. So let's go onto the 15-minute and see what happens. We have the daily open right here. You had London session that had this Judah swing and had this very messy move right here. You could have entered here in a way, but price just looks way too messy because it ends up not sweeping anything. So we end up coming for this high, moving lower, sweeping these lows, and then what happens? We finish with a candle just above that high. So the open right here is 600 and the close right here is 601. So this is a little bit on the aggressive side right here, but you could have entered right here, stop loss below this low, and you can go for the high. But I personally don't really like 50 pips moves, so I would basically target either this high or a 1 to 2. But let's just say you go for a 1 to 2. So now you've targeted the high, 1 to 2 has been achieved. Now on the next day we are still bullish, and as you can see we are now looking for once again a Judah swing below the low followed by an impulse up. Let's see what happens. And okay, during Asia we have this sweep above the high. But what ends up happening is that we actually come below the daily opening price. We start having this big bearish push and you're like, is this really it? To which you understand that, nah, it's probably just manipulation to end up moving up yet again. So we have, this is why I don't like trading view for backtesting, but you have this move right here. So what do you expect again? You expect a bearish push followed by a move up towards those highs. So if we see right here, we have this push during Asia, and I'm saying this because this is a trade that I personally entered on. You had a big bullish catalyst for price to go for those highs. It was the news. So once I saw the market actually doing this, I was looking for some kind of manipulation during a session so then I can enter long. And then we had this basically bearish push that was the Judah swing. And then since I was targeting the highs, I was actually looking for reasons to go long. So now that we basically had no more trades on the way up, let's go a little bit more back and see if on this day where the draw on liquidity could be these highs right here. You also have these highs right here and this up close candle. This is what I was targeting on this day right here. Let's delete this. Let's go into the 15-minute and see if we had once again a bearish push on the day, which we did. Manipulation, sweep of these lows. Look at this, sweep of these lows. Beautiful entry. If you want to be more aggressive, you can enter after we have this bearish shift. You can definitely enter here, but you can expect to have a little bit of more fake outs. So you have this right here and you just target these highs or these highs. It's already a 1 to 3, a 1 to 4. You don't need to target much more than a 1 to 2. You need to understand this. And for example, again, right here, you have this bullish push above those highs right here, possible entry. A little bit of drawdown, 15, let's say 16 pip stop, that's below the low. Then you target the highs for a 1 to 2.5 or even these highs for a 1 to 2. Like again, you just need to look at this happening over and over again, the power of 3 and the candle closures with the daily bias for you to understand how you want to be trading on the day. So this is overall how I am looking at the markets. Once again, I'm looking at the daily bias and power of 3 to be my two most important concepts of ICT. And then I just look for a market shift in my direction while the market is bearish when I'm bullish, or the opposite when I'm bullish and the market is bearish. And then I just look to execute in my direction. So I hope you guys enjoyed. Make sure to backtest this and make sure to have at least 50 trades to back you up. I would even go as far as saying 500, but 50 trades should do the trick for you to see this actually playing out. So let me know how you get on with the backtesting in the comment section below. Hope you guys enjoyed, and I'll see you next week. Bye.